Okay everyone, welcome to my presentation on the price rejector, determining when a move is ending. This is going to be a market recap from June 20th to June 25th, 2016. My name is Michael Valtos. I'm the founder and trader of Orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only. It should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. What is the price rejector? It's an indicator based on order flow analysis to determine when the last buyer has bought and when the last seller has sold. The price rejector runs on the NinjaTrader software platform. It's easy to use. You just import it into NinjaTrader and trade. It's designed for an order flow footprint chart, but now it's been programmed to work on a normal bar chart. So you don't need a footprint chart. You could just use your normal chart that you're using that you've been using for your trading. A lot of people are intimidated with the footprint chart, and so this is a way that you can add an extra element into your trading to help you refine your entries, refine your exits. No PhD is needed. You don't need to sit in a trading room. No emotion. It's going to give you a signal. It's not going to give you a signal. It's up to you whether you want to take it or not. Okay, so what makes up the price rejector real quick? It looks at basically four key elements in the market: volume traded on the bid and the volume traded on the offer, recent price action, market imbalance, and it determines if the market is trending or has been traded in a range. Why are these levels important? Okay, well, let me explain. Volume traded on the bid or offer is important because not all prices are equal. When a market is hitting a high, you want to know, is the volume getting lesser or is the volume increasing? Or conversely, you're going into a low. How is volume looking? Are you going into the low on declining volume, or are you going into the low on increasing volume? Recent price action, if you're going to be taking a short, what's going on in the bar? Is the bar going up? Why would you want to short on a market, when the immediate bars are going up? You want to have confirmation, at least, at the bar level, that it's going down. A lot of indicators, they don't take into account that. They just, boom, spit out a number. You have to buy, you have to sell based on it. But, you have to take into what's happening in the bar. Market imbalance. When a market's balanced, then it's not going to put in a big move. It's not going to start to move. It's when a market starts becoming imbalanced that moves happen. Markets have two states. They're balanced, they're imbalanced. When a market's balanced, it's flat. Everyone's trading, everyone's happy. When a market becomes imbalanced, one side is taking over the other side. It's like a tug of war, and one side is winning, the side that is being aggressive and causing the imbalance. And lastly, is the market trending or is it in a range? If you're going to be expecting price to be rejected at a certain level, you have to have a move to, for price to get rejected. If the market is trading sideways and it's been trading in a range, well, price is being accepted at that area. What you need is the market to move to a level where it's going to reject the prices and come back down into that range. That's where the money is going to be made. Okay, so, this week has been kind of an extraordinary week. Midweek we had Janet Yellen testifying in front of the Senate. And then Thursday into Friday you had the Brexit vote. And the markets melted down after that. So, I'm going to take you through this week on a few of my different chart ranges that I use. And, show you how the price rejector reacted. Honestly, on Friday, I didn't trade. Thursday, I sort of shut it down already. I knew Friday was going to be volatile. There was things that happened in the markets. Things that happened, not in the market, but, the market reacted to things that happened. The Prime Minister resigning in the UK. That I wasn't expecting. I did expect Britain to leave, but again, I wasn't expecting the Prime Minister to resign. People think that high volatility is a good thing because you're going to get a lot of action, but it works both ways. And in high volatile markets, you could get killed very easily. Just real quick, if I had my choice between trading a market that's highly volatile or a low volatile market, I'd prefer the market with the low volatility because trends are much easier to trade, and you can use a trailing stop that's closer to the market. In a highly volatile market, it's going to be hard to stay in because you're going to have to put your stops at a very wide area, and you're going to increase your risk. So given a choice, I prefer to trade on days where normal events happening in the market, not extraordinary events. Okay, so we'll start here with the 10 range. I prefer to trade S&Ps during the U.S. session, but I'll just show you my charts for these these days. And if something happens outside of the normal trading hours, I'll still talk about it. A good indicator, a good system should work under all conditions, ideally. So, okay, so this is Monday, the 20th, right? And 4 in the morning, you got the price rejector kicking off here. This is a footprint chart, okay? I'll start with the footprint chart, and then I'll show it on a normal bar chart. For people that aren't into footprint charts, but I'm a order flow trader. I use a footprint chart, so that's what I'm going to start with. Okay, so we got this level here. It's a new high. This line here is the high, and it didn't really work out. It's 4 in the morning. We kind of went sideways. We took out the high by a couple ticks, really just hanging around it. After the cash open, we hit our high here at 914. You got the price rejector, you got divergence, got a ratio. The market sold off, down into this area down here at 1240, 2082. You got to buy. Market turned around a little bit, but just sort of went sideways on you. It didn't didn't fail immediately and sell off quite dramatically. And then so it's giving you a chance. I mean, this is 1244. This is quarter after 2, so you're not going to be staying in on a trade that's going sideways on you that long. And let's see if there's anything else later in the day. We got a buy here. This is right ahead of the cash close. During the cash close, you're going to get a ton of volume coming into the market, and all the big players are basically, for the most part, squaring up their book for the day, and a lot of the orders that are cash session are going to be completed here. I very rarely trade after the cash close, although this day you did get a big rally late after that in the last 15 minutes. Okay, so that's the end of that day. So the next day, Tuesday, that was Monday. Again, in the early European session, you got to sell here. Just kind of went sideways on you. Wasn't nothing major. Here, this one kind of went sideways. Okay, okay. So now we're into the the normal U.S. day session. Here's a buy here. Starts to go up, goes sideways. Yeah, it was going sideways, then it popped up. From the 77 level up to the 83, sort of came back down, went sideways. I mean, this was a move, but other than that, not much. Later, it went back up. Nothing up there on the high. Okay, that was it for that day. Now this is what, 23rd? This is the Asian session. Again, this is now the morning session here. I had my computer turned off, that's why I'm missing some data. 6 in the morning, you got to sell here. Yeah, it started to go off and just went sideways. It's during non-U.S. hours, the moves you get can either be one-way streets all day long, or they're just going to go sideways. And you see earlier it was going sideways. I think it was going sideways more because you got on Tuesday you had Janet Yellen, Wednesday Janet Yellen, Thursday you had the Brexit vote beginning. Obviously Friday, they counted up the votes. So if there's going to be any activity, I felt it was really going to happen during the day's session and maybe after Janet Yellen spoke. So, here we got, this is, 10:30, you got a sell signal here. Market started to come off, boom, just sort of, got the one bar right afterwards. and then was just hanging around sideways, for 3 bars before it fell over. That's a move from, this area, what, 88, 89, down to, I don't say down to directly to the low, but, it did go down to the low before turning around and just going sideways again. So, that was a decent move. I'm not saying you could have caught the whole thing. Before the close, again, I'm not, after 3 o'clock, I'm really done analyzing the market. I gave a signal right here before the close. We opened up higher in the aftermarket. I'll say aftermarket, but in the overnight session. So it's just going sideways. Here during 3 a.m. you got a buy signal right at this swing low. What is this? Anywhere in here is 80. The next bar is 87 already. And what did the market do? It just shot straight up. I mean, granted, this is at a lot of stuff going on with Brexit, people talking, people taking money off, people making their decisions. I'm not, so you get some of these moves I felt were a bit magnified on the back of that. Okay, that was it. That was the only trade of the day. It was one that, you saw in the morning, this is 3 in the morning, you got to move. The first 2 days of the week, when you had the signal, you didn't really get much of a move. Then here it was a very powerful move. Okay, then the day ended. Where are we? Yeah, we reopened. You got to sell, but I don't like to take the first bar of the day. At this high, nothing. Here. This is, well, it's in the evening. 7:19. You got to sell. Yeah, I'm really not interested in trading S&Ps at that time. I'd much rather trade Nikkei at that time. And we already got market sold off. This is the evening time. Gosh, where are we here? This is on the 23rd already. Markets was volatile that day. Nothing else moving very fast. Here's 8:20. This is again Brexit time. They're counting out the votes. That's why you see very thin volume and the market kind of going a bit berserko. It's hard. The market's moving very fast on these bars. You're getting one bar every 10 or 15 seconds. It's not trading conditions that I prefer. Honestly, I think people that say, oh yeah, hey, I got 50 points out of it on this move on this Brexit day. Maybe they're not trading with real money. I don't know. It's there's a lot of uncertainty in the market. You can get a lot of movements on unconfirmed facts. If you're trading with real money, if you're a professional, and a professional sitting on the sidelines at this time, this is why you see no volume in the market jumping around so fast, because people are reacting to what they're seeing on the news. The market's just going all over the place. Here we're trading 2054, working our way down. You don't really see many signals, because the market's just jumping around. It's getting pounded. Big orders are coming in. Hey, get me out of the market. They're getting people are calling the, Goldman Sachs, calling Barclays. They're calling these hedge funds are calling up, say, hey, just get me out. Sell me 50, sell me 500, sell me 1,000. Just get it done. That's why you're seeing a lot of imbalances in the markets. That's why you see these bars. It's only got 700, 800, 1,000, 1,600. It's not a lot of volume, so it's ridiculous for anybody that was trading at that time. It's kind of a mental exercise in futility as far as I'm concerned. I mean, I know when I was at the bank and we're trading, during the time when Bear Stearns and Lehman, everything was happening. It's mental. At that time, because it's just capitulation. People are getting out. They're not necessarily following anything in the market. It's outside forces that are dominating the market. It says, get out. We've hit our risk parameter. Just get me out. That's, you're not seeing any technical analysis. So trying to analyze the market with any form of technical analysis at the time doesn't really make sense. It's risk off, just get out of the market. That's what, the professionals are doing. And let's say, retail traders shouldn't be messing around in a market like this. This was a buy, but again, 2308, this bar happening 10 seconds later. The market's just going over and over and over. We hit limit down here. You see 13,000 at the limit offer here. Market did bounce up a bit, 10 points. But again, I'm not looking to trade that. Data's coming in fast and furious at this time. Yeah, here's a high. You got the price rejector. I'd love to say, yeah, you take that sell. I mean, some people would. They'd come out and say, yeah, you could be selling it up here, on the Brexit vote, and you'd be selling it at 36 and, covering it to wherever down here at 30, at 26. I mean, come on, be realistic. It takes guts to, who's going to risk, that's 10 points. If you're trading, you shouldn't be trading on a day like that. It's the one you just watch back, get the popcorn, watch the market. It's very tempting though to trade it, and it's hard to sit on the sidelines. If you're a trader, some people, they like the action and they want to trade. Yeah, I could pick 5 good winners, but I could also probably find 5 good losers on this day. You saw a nice winner there. You saw a few losers, but it's happening so fast. 8:05, boom. Okay, I remember this one. Popped up here, then came right back down. Waiting for the cash open on this day. Market shot straight up after the cash opened. I remember this. You got these imbalances going up, up, up. Going up, up, up. Hit this high, start coming down. Going nowhere, nothing. No indicators. So here's one. It started coming off. You get the double top, a recent double top. Start to come off, but then boom, turn around right very fast. Hit a new high. Come off here. You hit a high. It is at 2065. I remember this. Again, I was itching to take this short. I had a few things going on. I had the point of control up there. You got ratios afterwards. It's trading 2062. You saw a few failures here. Now this one really sold off quite dramatically. It never went back up there. That was, I could say, yeah, that was the trade. I could record a video and say, yeah, I sold that at 62. And, we just sold all the way down into the 30s. You never see a worse, you don't see any buy signals now. It's all, everything is just, all sells. And, just going lower and lower, lower. But, honestly, I didn't trade this day. We came into this low here at 2022, bounced up, sort of went sideways and going higher. Okay, before the cash close, you got a sell signal here. Then sold off after the cash closed quite nicely. You hit this low here, 16, right before the futures close, and then another one. So we'll see. I'd love to say, oh yeah, see, you got this one closed right on Friday, and we'll see. Coming on Sunday, we'll open up, 50 points higher, and say, yeah, I called it. But come on, be realistic. There's no way I'd hold any position over the weekend, especially with all the central bankers meeting. I'm sure they're on meeting frantically, deciding what's going to happen. And so I'll take a look at another chart here in a second. Okay, so this next chart is a bar chart. It's a E-mini 5 range chart, and I'll go through the week again with you so you can see how this price rejector performed. I don't want people thinking, oh, I'm cherry picking certain days. I'm trying to show the whole entire week during the whole trading day, as opposed to, a screenshot taken when the signal worked. You're seeing the successes, you're seeing the failures. A lot of people think that, they buy an indicator, every single trade is going to work. No, it's not like that. Trading, there is losses. At the beginning of this presentation, I read a disclaimer. The government says, you have to disclaim it, that there's losses in trading, because there are people out there that think that there is a holy grail to trading. There's not. Trading involves work. Trading involves thinking. It's, not something you just set and forget. So, okay, so again, this is June 20th. 5 range E-mini chart, September's, and take a look. 8:30, there's a sell here. It's cash open. I don't usually like to take signals right on the cash open or the day's open. I'll let the market settle down first. You're not going to take a trade. You're not going to be the first one taking a trade for the day. Let the market find its feet. Let it find its direction. So, a little bit after 9, you got a sell here. Came down to this buy. This is 92.5. Came down to, the 89 level. Still looking for its low, hasn't found it. You know, it thought here, nope, thought here, kind of went sideways. You know, still looking for that low. Okay, you know, it did get a little bit of a bounce up here, you know, before turning around. Then again, get another bullish signal. You rally a few points. This is a 5-range chart. Okay, be honest with yourself. What do you expect to get out of a chart when you're trading? You know, if you're trading a 5-range chart, what sort of price targets do you have? Do you have 10 points? I mean, that's ridiculous. You're trading a 5-range chart. That's basically a point and a half. You know, so to be expecting to get, you know, sell at the high and buy at the low of the day is kind of, I'll say stupid, but kind of ridiculous. It's not taking things, I'll say, in context, but you know, you're setting your expectations too high. You know, you're trading a shorter term chart. You should have shorter term price targets as well as stops. Okay, then you got a sell signal here, you know, 85-ish. You know, we sold down to 81, and it's already, you know, coming on 3 o'clock here, and we end the day. The next day starts 6:21. Okay, you know, this is the morning session. You know, it's up to you whether you want to trade in the morning. You don't get, sometimes you get good moves, sometimes you don't. It's a crapshoot. I mean, the volume's all right. Me, you know, I prefer not to trade E-minis, you know, outside of the cash hours. So you could trade Euro stocks at this time, you know, at 2 in the morning, you know, when the cash is open in Europe. Okay, so, you know, it's coming in at 7:30. 7 o'clock is usually when I start watching the S&Ps. You get a buy signal here, then you get another sell signal. You know, a little buy, it's kind of gone sideways. A sell here, you know, just after the cash open. Oh, this one is right after the cash open. This is the second one after the cash open. We sold off. Came down into the low. You got a buy signal right on the low. Rally up from there. You know, what time is it here? Now it's 12. Okay, you got a buy signal here. Yeah, we're still looking for the swing low. Didn't find it. You know, you got stopped out here. You get stopped out. And then you close for the day. So again, you know, I'm showing you the entire week. I'm not just picking out the times that it worked and showing you those. I'm showing you when it worked and when it didn't work. Okay, so now we're coming on the June 22nd. You had a buy here. You know, again, it's at that time, 3 in the morning. You know, are you looking to take any trades? 8:45, 8:38 after the cash open. I mean, there's one here at you know, 6-ish. Yeah, okay. You know, here just after the cash open, sort of in that time period. Usually, I like to give it 5 minutes to settle down. We rally up. There's no buy sells, no sells, no buy signals, no sell signals. Coming off. Came off, had a nice move up here from 91 down to 81, 10-point move. You know, it's looking for its low. You know, it thought it was giving you a low here. It, you know, initially appeared to look like it was going to be the low, but, you know, it failed. You get stopped out either here or in here. You know, going on later in the day, you know, just before 2 o'clock, you got a little buy signal here. You know, market went up from 80 up to 83. You know, then you got a sell signal, so you get short there, somewhere in there. You know, down to this low, it, you know, popped up a little bit before falling over. Yeah, and then you get this, you know, buy signal right on the low of the day. I'm not saying, you know, yeah, you could have bought it there and held it to the reopen, and no thanks. Okay, now we're coming into the 23rd. Now it's really funky time, you know, heading into that Brexit action. Okay, yeah, you know, this is Asian sessions, kind of quiet. I said trading minis during the Asian session is sometimes like watching paint dry. It can move very slow. Sometimes it'll move nicely, but majority of the time it moves very slow. You know, 3 o'clock, you had this buy signal. Okay, sell signal. You know, I said, you know, at this time I'd rather trade Euro stocks. You know, I can get better moves. Okay, 4 o'clock. 7 o'clock, okay, you know, like I said, you know, 7 o'clock is when you should really start keying in on the E-minis. And, you know, just give it a break, you know, take a break around the cash open. You know, give it the cash open about 5 minutes to work its way out. So, you know, this was a nice little sell, even if you know, it's held it to the cash open. You know, it's a short sell from, you know, 96, 97 down to 94, 93. You know, then this one is here, you know, it's a little bit around the cash opening time. It's debatable. You know, even if you take it, you get stopped out. You know, I ended my day early that day. And, you know, you got a sell signal here. Depends on how tight your stop is. You know, you're not talking about a lot here. You know, 99 to 99.50. So, if you're using a point stop or something, you'd be fine. 98 and a quarter up to 99.50. It's a point and a quarter. I mean, it really depends, where your entry is, where your stop is going to be. Okay, so now we're getting into crazy time. Again, this is the 24th. This is Friday. Brexit vote results coming in. Trading a 5-range chart, I think, is like not the best thing. I mean, the market was volatile at that time. It's moving around, not a lot of volume, really. It's, you're going to see signals that work. You're going to see signals that didn't work. Honestly, I wasn't trading at that time. I was watching the market, but I wasn't trading just because, I've traded conditions like that, many times, and I know what it's like. You're trying to get short here. If you're not using an automated entry system, say, where on bar close it automatically gets in. If you're more of a, click trader, meaning that, you go around clicking your entries. You think, hey, is a sell signal, I'm going to get short here. By the time you're able to get your order in, the market's trading down here. So, instead of selling it at 96 and a half, you're selling it at 95, 94 and a half. Okay, so yeah, I would love to say, yeah, hey, you could take this sell signal. Look, you could have gotten short here at 97, right off the high of the day, and hold it all the way down. I don't see any buy signals. You're down here to 50. Well, I'll say, hey, that's a 50-point winner. But, I mean, come on. I said it could easily, just rally against you as much. And then here's a nice another sell. I mean, some people will say, hey, the volatility like that it's great. Honestly, people that like to trade the volatility probably haven't been around in the markets long enough to know that you can get spanked. I have friends that ran hedge funds that traded volatility. When there's low volatility, yeah, they're making money consistently every month. Then 2008 happened, the Lehman crisis, and they blew up. I mean, for how many years they were making 2%, 3% a month, right? And then all of a sudden, volatility blew out, and they got a margin call, and they try to get the money in from Japan, but they're in Japan, and there's a time they're based in Singapore. By the time the communications happen, it's a day late, and the clearing firm basically blew them out of the position. So even though if they were able to hold it another day, these positions would have turned around, but instead they got blown out due to the volatility. So I mean, is that something you want to fight? Okay, so here's a nice move. Here's a little move, but then it turned around on you within a minute. Not even. You get short here, boom. This is 2020, 2021. You're already trading 5 points higher. That's what I'm talking about. When it works, it looks great, it looks beautiful, but from here, from this bar to this bar, you're talking 30 seconds. So by the time you get short, get your fill back, look at it, analyze it, look back up at the chart, you're trading 4 or 5 points against you. Well, I mean, you should have a stop in to stop you out, but still, on crazy markets like that day. I say, fortunately, days like Friday, are very rare. If this was every day in the markets, honestly, it'd probably be, a lot more hectic. So here's a buy signal, and it failed pretty quick. It failed within 10 seconds. There's another buy signal. It's looking for a slow. On a day like today, you don't know where the low is going to be. So if you're trying to pick a low, really, the only low you could pick for this day was limit offer, limit down. And it just, just going there. This is from 21.42, 21.44. You're dropping from 46 down to 26, a 20-point move in 2 minutes, not even. Back up. Back up again from 20.25 up to 38. Yeah, you get a sell signal here, and it's just it's a lot of all this whipping around here. It's whipping around. This buy signal didn't work. The sell signal did. This buy signal, yeah, probably would have stopped you out. Yeah, you have to have a stop in on a day like today. Now on volatile days, you're going to have, generally on more volatile days, you should widen your stops out. But you have to be able to judge what's a volatile day or not. Obviously, knowing what was going to happen is volatile day. All you got to do is look at the chart when you turn on your computer on this day, and if you're still sticking with a 1 point stop, then you're going to get a lot of losing trades, more so than if you were to blow it out an extra point or so. This was a buy that didn't work out. Sell right off the low. In this case, right, you're going to take a sell. 1999 was limit down. You're going to take a sell at 2004. You're only 4 points away when you've already had a 100-point range. I mean, trades like that don't make sense. I mean, you get a signal, don't take the trade. You got your limit down just below this line. And you're trading right here. If anything, hit the low, bounce back up, which is sort of what you did there. Okay, 1999 is limit down. Just hang again. You're going to get short at 03 with 1999 as your limit. I wouldn't. Then boom, you shot up. Here you go. You got to buy. Another buy. Another sell. Now you got all sorts of crap happening. You got Prime Minister resigning. That's it's going to be a crazy market for anybody that for anybody that actually took trades on this day. My hat's off to you. I didn't, but I knew that it was going to be a crazy day. I'd rather trade on normal days. I'd rather trade, when I pick up the low-hanging fruit rather than, having to stick my neck out, reach out on a branch that's bending. So here's a buy, didn't work out. Here's a sell, didn't work out. Here's a buy that did work out. Here's a sell that worked out, a buy that didn't work out. A couple buys that worked out. This one turned around on you. It's only 9 here. Now it's 10 o'clock. A buy that didn't work out. This buy that kind of worked out before it fell over. Nope, these two failed. This one kind of failed. Well, it started out all right, then turned around. A little bit up, and then down, just fell over. A little bit of a rally, failure. Okay, kind of sells off. Yeah, here's a little rally here. Now you're coming into the closing time, getting there. A little rally here. Yeah, these two failed. This one worked. Then, right on the low of the day. So we'll see, where we're going to open up on Sunday night. Okay, so this last chart I'm going to show you is a 5-year chart. Now, 5 years are a nice market to trade. They're not that volatile, and they often move from high to low. And you get good volumes, and you get good readings on the order flow. It's more of a market that's driven by supply and demand than speculative activity. So it's a 4-range chart. This is Monday the 20th. You got the price rejector here on the high. Trade right down to the low. You get the price rejector there. I mean, this is still, early. Whoops. This is still, 5 in the morning. The high was at 1 in the morning. Then we trade, right back up to this double top. You have 2 price rejectors kicking off there. And then you trade lower. And then that's it for the day. The next day, 6:30, 6:28, you got a low. You got the price rejector kicking off there. Trade straight up. Comes into this swing low here at 9:22. You get a little bit of a rally, kind of going sideways. Still looking for the low down here. This one fails. This one, I don't know. Yeah, again, this is kind of like similar to the one earlier. One up, one down, one kind of sideways. And then we get another sideways bar and we start coming off. Hit the low of the day. You got a divergence, got a ratio. Again, we sort of pop up, turn around. It was interesting that day. Every time you would hit a low, we would start to rally, then turn around. And then again, late in the day, 2 o'clock, just before 3 o'clock. This is a day where it's still, it's kind of struggling to find its low. You do get a little bit of a pop, but, I would hardly call those successful trades. And going to the next day, 20 seconds. This is the overnight session. This one didn't really work. This one not really as well, kind of sideways before turning down. So I mean, this first one here, the bar immediately after is green, and then green again. Here it's green, and then red, red, red. You hit this low, pop up, hit it again, pop back up, hit it, take out the low by a tick, just sort of hanging around. Then you get a divergence down here. You got the price rejector. We rally up to the next, the next level where you got a price rejector sell. Just sort of hangs around, comes off a little bit, turns around. You come up towards this swing high here. And you got a ratio, you got the, I'm saying you don't have a ratio, you got the divergence, and you got the price rejector. It's time is that just before 1 o'clock. You come off a little bit, but then you start to turn around. It's 2:30 at this point. Getting ready to close for the day. Okay, so now this is the 23rd. And this is where the volatility really picks up. Okay, so you come into this low. First time you hit it, you got the ratio, you got the divergence. Come down, test it again, you get the price rejector. You test it again, more volume. Again, you got a ratio. You start to pop back up. You jump up. Hit a price rejector up here, come off a little bit, sort of come back up, take it out. Let's see it here. I ended this day early, the data. Okay, then the next day is obviously the Brexit vote. This day is going to be all over the place. You get a price again at 7:45 p.m. Results are starting to come in. People are starting to analyze what's going on. You had to sell there. It's 8 o'clock at night. Market's all over the place. Normally it's not this volatile, but you had the Brexit vote, so every market was all. I'll say every market. A lot of financial markets were all over the place. I think corn wasn't crazy like the way these other markets were. Let's see. Sell that didn't work out. Another sell that didn't work out. So it was a sell. Kind of worked out. It's kind of very choppy at this time. This is a day that's not advisable to be trading. Here's a buy, worked out a bit before falling over. Here's one which kept rallying. Okay, this is 3 o'clock here. It's kind of very choppy. Here's a sell, kind of went sideways on you. Here's a sell that worked. Here's a sell that worked. Here's a buy, popped up. Here's another buy that popped up a bit. Okay, so you're already at 7:30 in the morning. Here's a buy that popped up a little bit. Another buy, didn't work out. Fail. This one kind of worked out. More going sideways. Sideways, I'd say this is a failure. 9 o'clock now. Fail. Yeah, this one worked, popped up. it started to work, then it failed. This one, well, you got, this is interesting, you got the stacked imbalance down here, and then you get the price rejector. It popped up a bit, that worked. And so, oh, I didn't realize it was so late in the day. This is at what time? 1:19. And then nothing further on into the close. Okay, so I just showed you a variety of different charts and time frames so you get a better sense of how it looks and works. Again, the price rejector is designed to work with an order flows chart, but will also work on a normal bar chart. I think to get the most value out of it, you should look at an order flows trader chart. So you get a better context of what the market is doing in terms of volume, buying and selling, what's being traded on the bid, what's being traded on the offer. Why I think that is because that's what makes order flow different. And when you have the price rejector with order flow, you are adding one of the most important parts of market analysis, volume, participation by participants in the market. Price-based indicators leave out an important part of market analysis, the participation. The volume or lack thereof will give you insights into price levels that are being rejected. So even though you can look at a normal bar chart, and I think to get the most value out of the order flows price rejector, you take into account, look at it, use an order flow chart with it. You could use mine. I think that works best, obviously. But say you already have an order flows chart, you could still, as long as it's on NinjaTrader, you could still add this indicator on there, and and it'll work. So again, it works on the NinjaTrader trading platform, and it works on order flow footprint charts as well as normal bar charts. But again, I think to get the most out of it, you should use a footprint chart, and it works on just about every futures market and time frame. So again, if you're an existing order flows trader software user, let me know, send me an email, and I'll give you a special deal on it. Really is just to cover some of the basic costs, the programming costs. If you're a new user, email me again, and if you're interested in my order flow traders footprint chart, I'll make you an offer, a good deal on everything. You get the order flows trader, you get the price rejector, the delta scalper, get the trading course. Let me know. I'm flexible. We can work things out. So thanks for watching this video. Visit my website, www.orderflows.com. If you want to see a more in-depth view of this price rejector, visit www.pricerejector.com. So thanks, and I'll see you on the inside. Bye-bye.